India signs big-ticket pacts with Singapore, from green shipping to semiconductors, tightening a partnership built on trust and trade. Back home, your festive food orders are getting pricier as Swiggy and Zomato slip in new fees. Confident you'll still keep ordering. But beyond business, in Europe, Brussels is nudging New Delhi to play peacemaker in Ukraine, while trade talks edge towards a make-or-break moment. On the markets front, gold has lost some of its shine as stocks rally on GST reforms. And in the EV space, Ola's shares are flying high even as SoftBank quietly cashes out. Plenty to unpack. Let's dive in. Good morning. Welcome to Top of the Morning by Mint. I'm your host, Nelson John. This is your smart daily briefing on what matters. From big moves in business to headlines shaping India and the world, we cut through the noise so you start your day informed and ahead. It's Friday, September 5th. Let's get started. India and Singapore tightened their strategic embrace on Thursday as Prime Minister Narendra Modi and his Singaporean counterpart, Lawrence Wong, unveiled a roadmap spanning 8 pillars, from economic cooperation to defense, healthcare and sustainability. The two nations signed 5 agreements, including pacts on fintech, innovation, green shipping, advanced manufacturing, aviation training and space collaboration. Wong, on his first India visit as PM, pledged to expand Singapore's role as India's top investor, focusing on semiconductors, logistics and sustainable industrial parks. Both leaders also punched for a Green Lane initiative to secure supply chains, while virtually inaugurating the second phase of the Bharat-Mumbai container terminal run by Singapore's PSA International. Singapore is a vital pillar of our Act East policy, Modi said, calling the city-state India's largest Southeast Asian trading partner. Well, Wong echoed that sentiment too, stressing that in turbulent times, the partnership mattered most because it rests on shared values, mutual respect and trust. The new roadmap also includes time-bound reviews of India-Singapore CECA and the ASEAN-India Trade Pact, where India seeks more balanced trade terms. On security, both sides vow to intensify counter-terror operation. Singapore, with $170 billion invested in India and two-way trade now touching $35 billion, remains a crucial partner. The latest deals signals not just economic intent, but also a joint commitment to shape stability in the Indo-Pacific. India's food delivery giants are quietly padding bills this festive season. Swiggy and Eternal, formerly Zomato, have raised platform fees to 15 and 12 rupees in top cities, while also rolling out surge pricing, rain fees and long-distance charges. Add to that an 18% GST now levied on delivery services, and every order is going to cost a little more. Here's the thing. Platforms are betting you won't mind. Demand spikes 30 to 50% between August and December, and convenience usually trumps price. A Meta survey last year found cost ranked low on why Indians choose quick commerce. Speed and reliability mattered more. The math is staggering. Swiggy and Eternal processes nearly 5 million orders a day. Even 2 to 3 rupee hike per order can bring in crores. Eternal's fees, once just 2 rupees, has now jumped 6-fold in a year. Analysts say the fee bump will help boost margins as firms spend heavily on delivery fleets and warehouses for the festive rush. It's crucial for platforms to improve profitability, said Satish Meena of Datum Intelligence. For Zomato, higher platform fees could accelerate its push towards 5% adjusted EBITDA. Amazon and Flipkart too have added their own platform fees, 5 and 3 respectively, turning what began as a pilot surcharges into standard practice. The bottom line here is your Diwali sweets or midnight biryani will cost more, but the apps are betting you'll keep ordering anyway. SoftBank has quietly trimmed its holdings in Ola Electric for the first time since the EV maker went public last year. Between mid-July and early September, the Japanese giant investment arm sold nearly 95 million shares. Now that's about 2.15% of the company, bringing its stake down to 15.68% from 17.83%. Despite the sale, SoftBank remains Ola's second biggest shareholder after founder Bhavesh Agrawal. Now, here's the twist. While SoftBank was selling, Ola's stock was on fire. Shares surged 61% in under a month, with August alone delivering a 37% jump, the best month rally since listing. The trigger? Agrawal's bold roadmap unveiled at the company's Sankalp event, where he set sights on capturing up to 30% of India's EV two-wheeler market through vertical integration and new product launches. Momentum also came from China lifting export restrictions on rare earth magnets, critical for EV motors. Now, the move eased supply concerns for Indian manufacturers just ahead of the festive season, giving Ola a timely tailwind. On the financial side, Ola narrowed its quarterly losses to about 428 crore rupees from 870 crore rupees the previous quarter. But revenue took a hit, plunging nearly 50% year-on-year to 828 crore rupees. Now, what this really means is that SoftBank may be lightening up, but Ola's growth narrative and the recent stock rally suggest investors are betting on Agrawal's vision for India's EV future. European Commission President Ursula von der Leyen has called India a crucial player in ending the Ukraine war. After a phone call with Prime Minister Modi, she posted on X, "We warmly welcome India's continued engagement with President Zelensky. India has an important role to play in bringing Russia to end its war of aggression and helping create a path towards peace." Von der Leyen stressed the war is more than a European problem. This war carries global security consequences and undermines economic stability. So it's a risk to the entire world, she said. The conversation also looked ahead to EU-India ties. Both sides aimed to finalize a joint strategic agenda at their next summit in 2026. More immediately, Brussels is pushing hard to wrap up free trade talks with India by the end of this year. Progress has been slow, and the EU chief urged speed. Her remark echoed External Affairs Minister S. Jaishankar, who just a day earlier said India wants the EU trade talks to reach a decisive conclusion. Negotiations will resume in New Delhi on September 8th, the 13th round since talks restarted in 2022 after nearly a decade-long freeze. Here's what Europe wants: India's diplomatic heft on Ukraine, while trade talks could unlock one of the world's biggest free trade deals, if negotiators can finally bridge their differences. Gold prices tumbled on Thursday as investors shifted towards equities after India's GST Council announced sweeping tax cuts. On the MCX, October gold futures slipped 0.46% to 1,06,704 rupees per 10 grams, while silver fell 0.81% to 1,24,850 rupees per kg by evening trade. Meanwhile, the Sensex and Nifty surged nearly 1% in early trade, reflecting optimism that reforms will boost consumption and lift GDP growth by about 1% point over the next year. Now, here's the thing. Gold's safe haven appeal took a backseat. Internationally, prices also eased as traders booked profits after record highs, even as markets largely expected the US Fed to cut rates on September 17th. Job openings in the US fell more than forecast in July, adding to the case for a rate cut. So, should you buy gold now? Well, analysts advise caution. Manoj Kumar Jain of Prithvi Finmart says it's time to book profits. Targets have been met, and wait for a deeper dive before taking fresh positions. His call: avoid short selling, but use corrections as entry points. Support for MCX gold sits around 1,06,500 rupees to 1,05,800 rupees, with resistance near 1,08,850 rupees. And silver support is at 1,23,500 rupees, resistance at 1,28,500 rupees. With reforms boosting equity appetite and global cues turning weak, gold may see more cooling before the next rally. That's all for today. Thank you for joining in. We are eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest news. Until then, this is Nelson John signing off. Have a great weekend.